Welcome to Alpha Recap. Markets were closed for the day, and we're unpacking the headlines that mattered after the close. I'm Morgan, your market analyst host, and with me is Drew, our tech sector analyst. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Excited to dive into this tape.
So, what really stands out here is that automation dominated the headlines across telecom, energy, and even software channels. The story that kicked things off today was Huawei's push at Mobile World Congress in Barcelona.
Huawei had two big narratives, right? One for industrial networks and one for carrier core automation.
Exactly. First, Huawei promoted a fully connected industrial networks pitch aimed at smart factories. And second, they upgraded their core automation suite, ICN Master, to push single-domain autonomy for carrier cores. Both moves were positioned to be one-stop solutions for carriers, big manufacturers, and systems integrators.
Hold on, say that again? Single domain autonomy for carrier cores. What does that mean in plain English?
Good question. In simple terms, it means less hands-on operations. Instead of operators manually configuring and troubleshooting parts of the network, the software automates maintenance and fixes inside a single domain, like the core network. So the carrier needs fewer manual interventions. It's about lower operating cost and faster problem resolution. Huawei presented this industrial networking idea to about 100 customers at an MWC forum. And that audience is strategic. They weren't just showing tech, they were pitching end-to-end stacks that could lock in operator and factory-level adoption.
I mean, when you step back and look at this, that's a full stack play. If carriers buy into both the industrial networking and the core automation, that could change procurement cycles.
Right, and that's the market sensitivity point. Even though Huawei is private, headlines and early pilots can influence public peers, specifically Ericsson, Nokia, and Cisco. If carriers announce Huawei-centric trials or pilots convert to contracts, those public vendors could see near-term share price sensitivity.
So for investors, the signal to watch is carrier trial announcements and RFP outcomes?
Exactly. Monitor carrier trial updates, partner signings, and any pilot-to-contract conversions. Those are the clearest signs that marketing is translating into orders that will show up in public vendor order books.
Right. And the other thing is competition. This directly competes with automation stacks from those public vendors.
Yeah, that tracks. Trading implications were straightforward. Infrastructure investors should watch order flow, and short-term traders needed to manage event risk because MWC headlines can spark intraday moves in the vendor names. Moving to energy and industrials, Turbo Energy announced deployments totaling 366 megawatt-hours and framed those projects as AI-driven electrification meant to protect margins for energy-intensive manufacturers.
366 megawatt hours. That's a meaningful operational metric. How should investors interpret that?
It's an early commercial scale indicator. Turbo Energy's pitch was that by electrifying processes and layering AI-based control, industrial customers could lock in more predictable energy inputs. That reduces exposure to volatile fuel prices and can stabilize margins.
So it's not just saving energy, it's about smoothing input costs and forecastability.
Exactly. If industrials can make their energy costs less volatile, they can plan CapEx more confidently and build longer supplier relationships. The things to watch are additional mega-double-hour milestones, partner deals with large industrials or utilities like NextEra Energy, and any case studies that show quantified cost savings.
Honestly, I was a bit surprised by this one. AI plus electrification sounded like a buzzword mashup, but these deployments give it credibility.
Yeah, and small deployment milestones can be the difference between a demo and repeatable revenue. If we see more commercial partnerships or published savings, that's the inflection to revenue recognition and analyst interest.
Right.
Let's talk market flow and volatility. Google Trends spiked for the phrase Dow Jones, hit about 100,000 US searches, up 100%, which is a clear retail attention signal.
Retail attention often translates into outsized intraday moves, right?
Exactly. We saw two headline volume moves. One microcap name jumped about 4% to 10 cents on roughly 195 million shares traded. And a leveraged inverse semiconductor ETF climbed about 4% to about $1.79 on about 726 million shares traded. Those are textbook retail and flow-driven moves where momentum can overwhelm fundamentals.
That creates execution risk for big managers.
Right. Elevated search interest and outsized volume usually meant wider intraday ranges and execution challenges for larger orders. Hedge managers and traders using leveraged or inverse ETFs needed to be extra vigilant. These instruments can move against hedges quickly.
Short squeezes and quick reversals are real risks. Tight risk controls.
Exactly. Quick reactions, proper sizing, and stop discipline matter today. On consumer and corporate news, Coca-Cola Bottling Company hit a record high of $205. That was a price momentum move without much confirmatory volume or fundamentals in the brief.
So momentum traders might chase, but fundamental investors should wait for volume confirmation or a company statement.
Right. Momentum traders could look for follow-through above $205, but long-term investors should seek corroborating data.
Got it.
In biotech, Anixa Biosciences had an annual meeting and a clinical update window. Investors were focused on ovarian CAR-T survival observations and final phase 1 breast cancer vaccine data. Classic event-driven material that created potential swings.
Those are high volatility items. Survival numbers and dose details can move a stock a long way in either direction.
Correct. Traders needed to prepare for volatility around survival curves and any regulatory commentary. Also, analyst activity picked up for BrightSpring Health after a bullish note from TD Cowen, but the note didn't include a disclosed price target, so it was positive sentiment but incomplete for immediate valuation plays.
Right. Without a target, you get tone, but not actionable price context.
Exactly.
Yeah, absolutely.
On partnerships and channels, Unlimited Tech Solutions expanded its AirCall partnership and launched implementation packages. That's a private company move, but channel expansions like this help SaaS ecosystems by improving implementation and stickiness for AirCall and CRM integrations.
So the practical takeaway is more service-led monetization, which can increase recurring revenue over time.
Yep. The signal to watch there was client announcements or contract metrics showing conversion into recurring revenue or larger deal sizes. Let's do a quick pattern summary. Automation and digitalization were the through line. Huawei's network automation, Turbo Energy's AI electrification, and AirCall implementation services all reinforced a market-wide focus on software-enabled efficiency gains.
And retail flows plus headline volume continue to drive the day's most immediate price action.
Exactly. The Google trend spike and the heavy volume microcap and ETF moves showed attention and flows, not just fundamentals, were steering short-term prices. Event-driven biotech and analyst activity remained reliable catalysts, too.
So what should listeners be watching tomorrow?
Good question. First, carrier and operator responses from Mobile World Congress. Any trial announcements, partner signings, or carrier evaluations referencing Huawei's ICN Master or Industrial Networking Framework. Second, details from Anixa's presentation, survival curves, dose clarity, and any regulatory pathway commentary. Third, further deployment updates from Turbo Energy, more megawatt-hour milestones or commercial partnerships. Also, monitor the heavily traded retail names for continuation or reversal, and check Coca-Cola Bottling Company for volume confirmation. Finally, watch for analyst follow-ups, especially a full note from TD Cowen on BrightSpring with a disclosed target.
Makes sense. Quick question. For someone trading the vendor names, what's the simplest playbook?
Simple playbook. Monitor headlines closely, size positions for event risk, use stops, and avoid getting caught in headline-driven whipsaws. For longer-term investors, wait for order confirmations and contract language that shows repeatability.
Short reactions.
Right.
Quick takeaways?
3 clear takeaways. 1. Automation narratives were the day's dominant theme, from telecom cores to factory floors to energy systems. 2. Retail attention and headline-driven volume continued to create outsized intraday moves that demanded tight risk controls. 3. Event-driven biotech and analyst activity remained effective catalysts. Specifics will determine volatility and direction.
Those are great. Anything else you'd add for listeners?
Just one more note. Private company innovation is shaping public markets. Huawei and smaller electrification players are influencing procurement conversations. That means public vendors and utilities could see indirect impacts as pilots mature into contracts.
Got it. Thanks, Morgan.
Thank you. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. That's stockalpha.ai. We'll see you next market day. Sign off.